back again with another one. And something that's come to mind recently is cognitive bias and the different types of biases that can affect us in trading. I know it's something that I had to deal with, something I've had to deal with, and something I'm still overcoming. And from my understanding, cognitive bias is the systematic deviation in rationality and objective thinking, which essentially is a mental shortcut, so the brain preserves energy. However, this can lead to mishaps in reasoning and judgment and stuff like that. So these mental shortcuts can be detrimental to us and our trading. And yeah, I'm just going to dive into the different types of biases that I believe can have a negative effect on our trading performance. So let's dive into it. Cognitive bias. So this was a brain. Yeah, my drawing is better, but obviously I'm doing it with a mouse. But yeah, the first type of bias that I'd want to dive into, and I've got my notes here so I don't miss anything, is confirmation bias. And confirmation bias essentially is a seeking out or interpretation of information that is congruent to what we already believe. And example for this could be that we have a bearish daily bias, and going throughout the day we stick to that daily bias. Obviously it's good to have a bias and stick to it. However, if the market is showing us something completely different, then we need to sort of change our thinking and shift to more of a, did I say bearish? Yeah, more of a bullish bias, so that we are in line with the markets and we're in flow with what the markets is actually telling us. However, if we have a cognitive bias to where we're stuck in that bullish daily bias for the entire day, even though the market's showing us something different, then we're not in alignment. And yeah, that can be detrimental to our trading because we're not in flow with the market, and the market's always showing us something, and the market is always changing. It's always in fluctuations and stuff like that, so we need to be in tune with that. So that's the first one, confirmation bias, the seeking out and interpretation of information that's congruent with what we already believe. The second bias that I believe can affect us in our trading is anchoring bias. Anchoring bias is relying too heavily on first piece of information seen. So this first piece of information is the anchor. An example of this could be, okay, we open up the charts, the session starts, we see a strong impulsive move to the upside. However, after this impulsive move, we see then a lot of weakness, a complete retrace of that move. However, if we are mentally stuck on that strong bullish impulsive move that we seen first, and we're mentally stuck on that, we're not going to take into account that price has completely retraced the entire move, and that's essentially showing a shift in momentum. However, if we're stuck with the anchored bias of that bullish move, we'll then still look to take bias because that's what we're mentally focused on, if that makes sense. So this bias here will be detrimental to our trading because we're not, again, in flow with the markets, and that's what we need to do. We need to be neutral and look at the market for what it's showing to us at each moment, because it's always changing, and it can look one way, however the next minute it can look another way. So this is the second bias, which can hold us back from performing at our best in our trading. The third bias I want to go through, and there's plenty, I guess there's plenty different more biases, but I'm only going to cover 4. And the third bias I'm going to talk about is hindsight bias. Hindsight bias is believing after an event you knew it all along. So an example of this would be, let's say you see a position and it's 100% in line with your plan. However, you feel that you don't want to get involved in the position because you feel like it might lose, which isn't a good mindset to have because it's in line with your plan. However, because you decided to just not take this position. However, we know positions can lose, positions can win. In this case, you've not taken this position because you believe it's going to lose. After, the trade has lost. However, prior to taking that trade, we've never done the outcome. After, we've seen the outcome and it's a loss. Because we avoided the trade believing it's going to be a loss and it actually was a loss, it doesn't mean we was right. In hindsight, we was right, but in the future, we never knew what the outcome would be. So this is hindsight bias. We were not right. We wasn't right. The market just, it didn't work in our favor that time. I hope I explained that well. Hopefully get a good understanding of what that is. But that's the third bias. The fourth bias that I want to touch on is the bandwagon effect. The bandwagon effect is believing or doing something simply because other people are doing it. Okay, and everyone has their way of viewing the market. Everyone has different strategies, and someone might come to you saying, "Okay, I believe pound dollar is going to go up today. Definitely get in, man. Definitely get in my strategy saying, yeah, do this. You can make $1,000. You can make $10,000 on this position." Another person, I don't know, their two strategies might align a bit, come to you saying, "Oh yeah, now get into pound dollar. Get in, man. It's definitely a bullish day." You then believe what they're saying and get involved in pound dollar. Your strategy doesn't tell you to get involved in pound dollar. However, you're involved in pound dollar. Why are you involved in pound dollar? Due to the bandwagon effect, because other people are telling you, yeah, do this. This is detrimental. You're not performing in congruence with your plan. That's what we need to do as traders, perform in congruence with our plan. This is something I'm still working on. I want to be performing in congruence with my plan as best as I can. The bandwagon effect will not allow me to do that. If I open up Instagram and I see a lot of people getting into pound dollar and I get involved in pound dollar just because people are saying, yeah, no, it's going up. However, my strategy hasn't aligned, it hasn't come to fruition. What am I doing? So these are the four biases that I feel like can affect you in your trading, and hopefully I defined and went through them clearly as possible so you have a good understanding of them. I'll be back with another video, more insight, more value to provide, and yeah, we'll see you later, man.